Hello and welcome to FinTrail's FinCrime Spotlight. So I'm Ciara and I'm joined today by James. How are you, James?
Very good, thanks.
Cool. So this week, we've had the FCA issue a Dear CEO letter specifically addressed at payment firms, and it comes actually quite hot off the heels of the multi-firm review, which they issued a few days ago, which also focuses on payment services firms as well as wealth management providers and contract for different firms as well. So we're going to take some time to discuss that Dear CEO letter today and what that means for payment firms.
Sure. I guess maybe like reflecting on what we mean by Dear CEO letter. Like obviously payment firms covers a whole range of people in their different stages of their journey. So people may not all know what this actually means to them.
Perfect. So yeah, I think from a Dear CEO letter perspective, like under the banner of their supervisory correspondence, the FCA do regularly communicate with firms over a number of different ways about what their views of how firms specifically within certain sectors and markets are performing. And this is across the broad compliance environment. And I think the Dear CEO letter specifically look to set out sort of their approach and priorities and make it clear what their expectations are of firms. And I think we're seeing them used more commonly over the past few years, really to focus firms and particularly senior management's attention on issues that need to be addressed, and particularly what actions they require from these firms in certain industries. So the letter that we've seen issued this week has been directed to firms supervised by the FCA under their payments portfolio. It includes firms authorised or registered under the PSRs or the electronic money regulation, so EMIs or payment institutions, for example. And I think it's probably fair to say that this letter specifically was quite direct. It highlights, and I think quoting from the letter, that some firms, in their view, present an unacceptable risk of harm to their consumers and to the financial system's integrity, and particularly heightened by the current economic environment that we're in and the cost of living crisis. And whilst it looks at a few key priorities like safeguarding there, consumer duty, liquidity risk management, and all of those are even more undoubtedly a core focus after some of the industry events that we've seen over the past week. It specifically looks at some key areas on financial system integrity, covering off, I think, financial crime controls, which I think is worth sort of spending a few minutes on. So James, maybe do you want to sort of chat through some of the things that have been highlighted in the report around money laundering and financial crime specifically?
In short, absolutely everything. So I guess it's similar themes to some of the things that we've identified through some of our work with these kind of organizations through our audits and assurance practices. But I've got the long list in front of me, which maybe I'll just read off just to highlight a little bit. But they're all the same things and themes that we've seen before in some of the other kind of Dear CEO letters as well. So no real surprises in some of them, but ultimately it is inadequate KYC and due diligence, business-wide risk assessments not being good enough, enhanced due diligence not being adequately risk-based, lack of review and refresh in risk assessments and control frameworks in that forever changing kind of control landscape, insufficient policies and procedures, not detailed enough. And generally failure, and this is linked to I think what we saw them release last week on one of their research reports on scaling companies and lack of ability to kind of manage growth and controls in line with significant growth as well. Name screening, so sanctions, it comes into play again, and finally on their sanction screening, not being able to generate alerts against certain names against the OFSI list. So some very specific things in the capabilities of their screening pieces as well.
Yeah, and I think probably a lot of things that we've seen out of some of the enforcement actions that have come out of the FCA earlier this year, for example, and some of the ones that we've seen around scaling with growth that may have triggered this. We discussed the Coinbase enforcement action in one of our earlier spotlights as well, and the things that firms need to be aware of as they're growing, but also as their sort of financial crime framework is maturing as well. And I think an important point for me called out in the letter specifically hones in on fraud. And it's not something that necessarily we've seen as direct in a Dear CEO letter in the past. It generally looks at sort of the broader range of your AML control framework, but the FCAs are called out that they're specifically concerned with the elevated fraud rates that they're seeing in payment services firms. And again, it's particularly how, and we've done a few pieces on economic crime in a recession and the impact of fraud in a recession, but how that's exacerbating the levels of fraud as a result of this cost of living crisis we're in. And the report itself calls out a number of weaknesses in the systems and controls that they're seeing in this space. So like looking at the insufficient emphasis of firms in mitigating fraud risk for their customers, and the customer education piece on this, which I think we all, particularly when we look at the levels of APP scams that we're seeing, is really important. A lack of industry engagement on some number of bodies on the fraud agenda, and backlogs as well that they're seeing within firms on fraud reports. That means that consumers are not seeing action in a timely fashion as well too. And again, and a large number of consumer accounts being used to receive the proceeds of fraud. So I think it's very much an area of focus. And I know we've been speaking to a number of sort of clients on this area as well too. But interestingly, I think the report calls out some immediate attention for fraud for firms in this fraud space. Like, do you want to maybe sort of talk to us about what does it pull out specifically?
Yeah, definitely. But I guess just, to recap on what you're saying there, because that's probably the important bit more than anything, rather than the granular bit, it's the wording of it as well that we want to unpick. I think if you look at some of the bits related to broader AML, what they're saying is, we expect you to do this, which is obviously a little bit less direct. Mm-hmm. But what you can see in the actual wording on the fraud bit, which is obviously generally new to some of these Dear CEO letters as well, which is important to highlight as well, is they're saying, we expect you to take immediate action. Mm-hmm. So that is a call for action for you as, a regulated firm to look at the specific areas of concern. Obviously, if you do not do that and you are subsequently are involved in some kind of visit related to this, and you can't evidence that you are looking at these particular areas, you're probably going to come under further scrutiny. So I think the first bit I'd like to highlight is the difference in the tone there, which, making sure you identify or you realise the severity of this from a kind of a supervisory perspective. So, but specifically, in the areas that it calls out that they expect you to take immediate action on is risk appetite statements and policies related to risk of fraud and your customers, reviewing its fraud prevention systems, so expectations that you are regularly reviewing these to ensure that they are effective. Then finally, maintains appropriate customer due diligence controls at onboarding stage and an ongoing basis to identify and prevent accounts from being used to receive proceeds of fraud and financial crime. So those are the holy trinity that they've highlighted there that you're expected to kind of take immediate action on.
Yeah, and we did a survey on across the financial services space last year, and it very much recognised that firms are seeing a significant increase in their fraud levels, and they are looking at how they are maturing their controls to deal with this. But if you were a firm receiving this letter today, what would you specifically be doing off the back of this, James?
Well, firstly, don't panic, right? It's all within your reasonable control control, obviously. So these things are meant to kind of help to address problems in the industry. So, but don't ignore it, I guess, is the key advice. So in terms of taking actions, and what we would expect you to think about doing is, ensuring that you're thinking about the scale and growth of your controls as you grow. That's clearly a theme at the moment in this Dear CEO letter and some of the previous pieces they've released, I think earlier this week or last week as well. Mm-hmm. So that's a theme. It's on the agenda. Think about that specifically. Making sure that you're regularly reviewing, obviously related to growth as well, that bit, but specifically and related to making sure you've got audits. So are you doing a yearly audit, either internally or externally, or making sure you're doing that? I think the risk assessment bit continues to come up as well. So to ensure that you understand your controls are effective and you understand your inherent risks that you're exposed to, fraud, financial crime, everything, making sure that you've got a firm business-wide financial crime risk assessment that you are continuously updating, I think is another key thing that continues to come up. And they also identify here as well. Specifically on SAR reporting, one of the things that they call out is making sure that you as a firm are compliant with the Proceeds of Crime Act and everything that comes with that, but also from a SAR reporting perspective, using the intelligence that you gain from those SARs to holistically understand the themes and risks that you're seeing. And that should all loop back into your risk assessments as well. So thinking about that. So they're talking about those things. And then finally, related to fraud, which we talked a little bit about earlier, is making sure that you're basically performing assurance on those areas that they've highlighted, making sure you're doing some sort of gap analysis against that. Do we have all of those things placed? Do we need an external person to review it? But ultimately making sure that they're front of mind, you're thinking about fraud, making sure you're closing the gaps on those areas that you may think you have deficiencies.
Yeah, and I think going back to sort of underpinning everything, as you say, is that enterprise-wide risk assessment. Does that specifically include fraud? Traditionally, AML and sanctions are very core components of them, but are you including the fraud in that as well, and that threat assessment piece too, and how you're building that in? So a lot to unpick within it. As you say, it's not a time to panic, but it's a good opportunity to take stock and reflect in terms of where you should be focusing some more immediate attention on some of these areas as well. But it's certainly, as you said, I think a call for action for firms, specifically in the payment space. But I think, again, with all these Dear CEO letters, they are so relevant across other regulated entities as well. So it's an opportunity for everyone to be reflecting on the contents of it and saying, right, is there anything we need to be thinking about on this? So, yep, interesting time for this one, James. Thank you. I think that covers everything we wanted to talk about today. So we'll leave it there. And thank you all for listening in. Cheers, James.
Thanks all.